Welcome back to Squawk. Google reporting results last night and shares slid on an earnings miss. The stock is recovering some of the losses this morning, but still down pre-market. Joining us right now to talk about it is Eric Sheridan. He is from UBS. He's ranked #1 in 2019's Institutional Investor Survey for his sector. And our own Mike Santoli joins us this morning as well. You looked at this report. You thought, what?
It needed a little bit of work to understand some of the below-the-line items. There was
Ruth Porat kept calling it noisy.
It was noisy. There was
CFO.
a $550 million penalty to French tax authorities. There was a mark-to-market on all the public and private investments Google has in companies like Uber and Lyft. You stripped all of that out. This was an in-line to better revenue quarter and an actually very good earnings quarter, with the company buying back $6 billion worth of stock in the quarter, which was a big surprise to the upside.
You're bullish on the stock.
I am.
So you don't look at this as a miss at all?
There was no miss on Sites revenue. That's right. YouTube and search. And on cloud, they beat on revenue and spoke very positively about cloud trends on the call last night.
Do you think investors are really going to XXXXX and then say, oh, I like it?
It seems like it. I mean, first thing to keep in mind, I mean, Alphabet shares were pretty close to their high as opposed to the other FANG stocks, which have been some margin below their high. So I do think people are looking for a good number. It's a similar story, right? The core businesses look great. Growing at 20% at this scale is kind of amazing. And I think there's a little bit of ambivalence all the time with investors saying, gee, wish they would harvest a little bit more, or just have a little more kind of ROI attitude about what they're investing in at this point. But on the other hand, you know, again, the core business is great and you have exposure to these massively growing areas, whether it's, you know, internet TV through YouTube or cloud.
Okay, give me the upside and downside for the stock.
I think the upside is closer to something like $1,500-1,600 per share.
Okay, in the next 12 months?
Over the next 12 to 18 months, that's our upside scenario. Our price target actually moved to $1,460 overnight. Against the free cash flow this throws off, I think your downside is around $1,000, $1,100. You know, we saw that level earlier this year when revenue surprisingly decelerated in Q1. That was the big miss that caused a big sell-off in the stock earlier this year. You've now seen 2 quarters of accelerating revenue off that miss in Q1. I think that's what people liked last night.